Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your favorite Bert the Hurt Locker, Lanny, Too Manny, the dividend champions of the world. And we are here to talk to you about a now dividend king. And it's been a long time since we've taken a look at them. And I'm glad we are because I'm curious if this is a stock that you own or a stock that you're buying or a stock that you're just watching.
Smash that subscribe button. Give this video a thumbs up. Let's freaking go. It is our Sunday morning stock review right here. Guys, help us grow this channel. Help us get to 20,000 subscribers. We can't wait. We are pumped up to help maybe ourselves grow a portfolio, but not just us, all of YouTube by trying to find and buy those undervalued dividends.
Yes, guys, let's have some fun here. Let's just have fun getting
Nope.
milestones. Come on, get me some more subscribers here, guys. This is us just saying, just hit that red button. It doesn't take any effort. So thank you, guys.
Doesn't. So who are we talking about here today, Lanny? This is a fun one. This is
Right. Yeah, we're diving into the utility industry, guys. And, you know, let's talk about this is really like it's fixed income. It's a low growth industry. You grow by either acquisition, you grow by increasing your prices per kilowatt or per MCF on your utility usage, um, or by cutting cost if they can,
Mhm.
obviously. And this income stream typically can grow by the rate of inflation year after year. That's why you love utility companies. So if you're somebody who's looking to add passive income, that's going to grow modestly, lower risk, lower volatility against the overall stock market. A utility stock like Bert owns AEP, he owns First Energy. He may own this stock as well.
Boom, stock
You
as
may
well.
own this stock. I own also First Energy and National Grid. But we wanted to feature one that's a dividend king, guys, in that
Mhm.
electric, net gas supplier space here. And, it's been a long time since we featured this stock, so we got to really get into the two letters, one of our top five foundation stocks, Con Ed. Ticker symbol is ED. If you know, you know.
If you do know, and we definitely know because we love Consolidated Edison here. What's fun about them? They are so close to being a dividend king, right, Lanny? They've increased that dividend for 49 consecutive years.
49 years, guys. And the beauty about Con Ed is when you actually look through their investor presentation during February when they release their annual earnings, they actually tout 50 consecutive years, though all the
Mhm.
websites say 49 plus. I think they have to just wait until this year is done and then they do hit 50. So who knows if Con Ed was a little ahead of themselves. But Bert, they
There's
love being a dividend stock. The fact that they present slides on that history.
yeah.
Tell me about the chart that we have here to share, Bert. What is that? What is this chart from their investor package?
This is one of the ugliest charts I've ever seen. Kidding. It's a fun chart here. It shows what's their historical dividend payout ratio and what's that dividend per share. So you know what it shows with the dividend per share, Lanny? It starts in
What?
1975, goes up through 2024, and you just see the line that shows the dividend per share. This blue bars just keep trickling on up here every single year, Lanny. You know what's cool about it too? It then overlays the dividend payout ratio on there too. And you can see they're still able to increase that dividend every single year without seeing that payout ratio also increase to 100%. The dividend ratio payout ratio for the last decade has continued to hover in that 60 to 75% range, which is what makes it so impressive for ComEd.
Yeah, and their policy is to be within that 55 to 65% of adjusted earnings.
Mhm.
Keywords there, guys. And it's just beautiful that they want to showcase it. They've done it through six different recessions. They've increased their dividend through six different US recessions according to their chart.
Love it.
So again, just you gotta love it. Now, they do expect earnings to be $5.20 to $5.40 going forward in 2025. And they also are projecting 6.4% annual growth rate based on their base, model here. So, and that's not just for 2025. That goes annually through 2028.
Yeah, and that's why you love utilities, consistent growth. They're expecting 6% growth. They're not blowing you out with the double-digit percent earnings per share. They're just saying it's going to be modest, mid to high single digits. That's what you get with the utility company. You get that predictable earnings, you get that predictable cash flow, and that predictable dividend growth.
Exactly. So we are going to throw Con Ed, ticker symbol ED, through the Dividend Diplomat stock screener, focused on 1, the price to earnings ratio, 2, the dividend payout ratio, 3, dividend growth. We'll look at the dividend yield. Again, prices are as of April 18th. We are cranking videos out for you guys. Hit that subscribe button. Let's ride, Bert. What's that first metric looking like for Con Ed?
Price is 90.90. Earnings per share is 531. That gives you a PE ratio of 17 to 12.
You know, not the cheapest utility stock, but definitely not the most expensive, would you say, Bert?
No, definitely not. But you pay for quality, and Con Ed is definitely a quality dividend growth stock. Their annual dividend is $3.32. That's a payout ratio of 62.5%.
Now, when it gets into dividend growth, we've already talked about the 49 plus years. They're pretty much a dividend king at this point. The last increase was only 2.5%. And then the increase before that was also 2.5%. And not to sound like a broken record, the last one before that was 2%. So these last few increases have been relatively small. Granted, most of these were during COVID and after COVID. So they're projecting over 6.4% growth. Do we get back to something closer to 3 to 6% growth on the dividend?
Yeah, it'll be interesting. And right now their yield is 3.65%, which is just a hair above its 5-year average of 3.46, so just 19 basis points over it. So it's pretty much in line with where they are historically.
So, we'll show the metrics again. Again, they're not screaming like you got to buy this dividend king right now. But maybe if you're a beginner investor and you're looking for some low beta, like a low volatility, boring stocks, Con Ed is right up there with the best of them.
Yeah, are you saying that if you're trying to build a dividend house, that you want a foundation stock like a Con Ed to build
You
that
want
growing passive income
you
stream?
want that top 5 foundation stock, as Bert's alluding to, and
Yeah,
the others, the Johnson and Johnsons, the Procter Gambles, McDonald's, Pepsi. We're coming for you.
yeah,
All of those high quality stocks.
yeah. It's kind of sexy, no, but it's a great company and it's a great stock for your dividend portfolio. This is one where, to your point, Lanny, if you just want to buy quality, it's never going to be the cheapest. It's never going to be a PE ratio above the S&P 500. It's just a fair priced, great stock.
Yeah. So let us know, guys. Do you own Con Ed? Do you own Consolidated Edison, ticker symbol ED? Do you own this stock in your portfolio? Are you buying this stock as the stock market has shown a little bit of red over the last week or so? Let us know in those comments.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, if you're not with us, you're against us, Jack.
That was Bert, the Herd, and Lanny from the Dividend Diplomats. Over and out.